Hey everyone, welcome to the weekly review. This week the market bounced and we went higher. We're retesting the all-time high now, and chances are we will continue going higher next week as well. If we turn now or later depends on what the reaction is to the FOMC decision. Expectations are split between 25 and 50 basis points cut, and most likely, I think we get 50 basis points because the Fed will play safe. If they don't play safe, they will make the market probably dump. Now, this setup here is extremely similar to the one we had in the top in 2021, um, with this some sideways consolidation here, this wave here. Next week we'll be looking for signs of exhaustion, meaning like a big candle here that goes up into the highs. The best turning points in the market are fake outs. I'll turn the lines back here. For example, like we had here, both up and down, we undercut the quarter pivot and the AVWAP from the recent low, and both times we bounced and went higher. Same thing we can see at the top in 2020, 2021, that it was an overshoot above the top. We went sideways for a bit afterwards and then reversed. Again, this is extremely similar to what we have now because this was 27th as the top, then another week of consolidation. Top was on Monday, consolidated the rest of the week, and the following week on Tuesday we had the beginning of the turn. And if we get a positive reaction to the Fed, we have the same calendar conditions as then. Basically, we continue up here. We have another week or so for this sideways movement at the top, and then this week we have the turn if we go up. Now, this is supported by many things, meaning fake outs can happen everywhere. Like we have Bitcoin here, which kind of follows Nvidia. I think we have a breakout here potentially to this trend line from the channel, but can even retest the all-time high area 70k plus. We have Nvidia um, again. I would call this a fake out, but we can potentially do it like this, make it an area. Anyway, it's back above both AVWAPs. It's going to attempt a fake move out here. I would not be surprised to see it retest this area, potentially even all-time high, go to 140 again. And this will be a single move. I'm less sure about Nvidia because I think tech will underperform. If the market is going to do a fake out, it's going to do it through value stocks, just like we had on Friday we had IWM going up. We had DIA going up. QQQ was the underperformer, and I would expect QQQ to continue being the underperformer, even though it may do a fake breakout as well here. So if the Fed cuts as expected by 50 basis points or on the higher end, I would expect we'll get another push in IWM here. But this is still a fake out and not to be trusted in my opinion. And we have value overperforming relative to Qs. I would expect this to continue. So we shall see how much Nvidia can go up in reality. Uh, i- Basically, two scenarios: one in which tech overperforms, and the other in which value overperforms in value expressed to IWM and DIA. I think it's more likely that we have the one where value outperforms and Nvidia just does like max 130 and then turns back down again. And the reason why we had this week's turn, supposedly from this candle here, supposedly is this quote from the Nvidia CEO that he did at the Goldman Sachs Tech Conference. This one about getting emotional customers today, because if they could fulfill everyone's needs, the emotion would go away. But it's very emotional, meaning people are. He wants to say that people are fighting over their GPUs, and we also had this the following day, which the beginning of a new tech revolution. We had Larry Ellison from Oracle saying that him and Elon begged Jensen to get GPUs. So this is the type of bullshit that happens at tops. You don't you don't see this type of pump and dumping, or at least pumping at bottoms. You see that the tops, and I think we are very close to getting hitting it here. The thing that doesn't look good is oil. Backtest of 70 and getting rejected. Again, this might go higher, but I'm not necessarily super bearish on oil, although I think it will go to 60 before it goes for a bigger bounce. 60 is not that far away. Uh, but I am more bearish on oil stocks. We have some breakdowns. We're going into an environment where, because of lower oil prices, that their profits will not be that high. They're still going to be profitable companies, but they won't be beating expectation as easily. And the market is already pricing weakness into them, like we saw Oxy breaking down from this consolidation, and we still have room to go down. We saw, which one was it? Chevron on the brink of losing the horizontal level as well. BP lost the horizontal level as same as Oxy. So we're seeing breakdowns here. We have some holding on for dear life, and I still think we go at least to 99 here back for the retest, but potentially even lower. And XLE losing the long-term trend line here. And when we compare this to oil, we see that oil stock has remained. Uh, you see how close they were here in this part, but there's a gap between XLE and oil prices. Oil went much lower than XLE, and this type of divergence can happen from time to time, but they almost always resolve eventually, and the the stocks catch up to oil. And I think even though oil may rebound, I think oil companies will perform poorly moving forward, at least until the end of the year, um, or at least we until we hit targets. Like for example, Oxy target is here, like the 40. I think 40 is that's 40. So at 40, it's a good buy, but until then, I think oil companies will perform poorly, and that's kind of the situation. And we were extremely oversold on some names, like I'll take CLF here. It went to 10, then had a big bounce. It's hard for the market to go lower when we have names like this who are super underperforming. So this bounce here and this attempt to go higher will still put in lower highs on those names, but then it will allow the market to go lower in a more substantial way. And again, going back to the analogy to the 2022 top, 2021 top, we may still do this. Like we have one attempt, second attempt, and only on the third attempt did it successfully make new lows. And this was like 10, 12%, I think. 12%, which is kind of what I expect we will get on our current setup, but it could also do this, like go back. Like for example, let's say the Fed only cuts 25 basis points, but then they market reacts negatively. We go back to 540, but then they start talking again, and they say something like they want to do more cuts, a lot more cuts for the rest of the year. And the market does a retest of 540, we bounce again, then we go to 570, and only then we do like the 10-12%. And I'm counting the percentage drop from 570 because I think we will hit that. and 12%-ish is exactly 500 basically. So yeah, this is the kind of playout we could get, or directly drop directly, or uh, do another move down to 540 all the way here. Basically build a consolidation range, a sideways range, which we seem to be doing already. Like another move down here and another bounce would not be that surprising, but it's still a distribution range, and eventually it should break down, and we at least double this range just by that standard. We should be getting 515 at least. Okay, this being said, let's look at the micro path on the 30-minute chart. So my expectation is that we will hit this AV up at some point. Um, we didn't get the push into the close to 565s as I thought it was possible we would do, but we broke this pennant, and um, I think we should get at least another double top kind of thing, which would be this. On Monday, we usually get a big spike pre-market, so I expect we will retest 560 in pre-market on Monday, but then bounce during hours and go higher. We get another VIX crush after VIX jumps up a bit, and then we could do another one, like we go to 560, double top or slightly higher top. We go to 564, 565. We do another one. So let's also draw this. This goes higher, that higher, something like this. So let's, if we get it on Monday, then we will get a double top, something like this. Again, bounce, go back higher in hours. And this is FOMC day, so we would get to 570. FOMC is around here, so didn't draw it exactly time accurate. I'll do that again. So let's say we get a double top, again, go in hours, no, too wide. We go here, we bounce on the AV up. In post market, we recover a bit. We go higher back to the highs, and the highs, that's where we find FOMC day. Then for FOMC, we grind up and then spike up to 570. Then we consolidate here for a while and eventually go back down later. So that's one path. The other one would be we make a higher high, a case in which I think we test down, make higher high, potentially like this, then recover in post market and still go up like this. Yeah, so the question now is not necessarily when and how we go up, it's or no, it is how we go up, but do we make a higher high here or we do like a double top, and this is going to be really small, like the range is this, and we should be going down to 557, something like this. From a market bear perspective, we are in the danger zone again. Again, I expect one of the reasons why I expect value to outperform Qs is because if only Qs goes up, breadth will not improve. And for this to be a fake out for the ages, the market has to give the illusion that it's going up broadly. So if the Fed cuts 50 basis points, IWM will outperform, DI will outperform, QQQ will do okay but not outperform. And because value outperforms, or IWM and DIA, then breadth will go up significantly. And we will do something like a top here. We will go to 60% bullish, maybe even higher, and that gives us the perfect top conditions. But remember, we will not be turning immediately. The turning point is expected to be here, 30th first, if the Fed reaction is bullish. If not, we have two scenarios. One is with a retest of 540. So let's say we are here. No, we are here. Then over the next couple of days, we test 540. And if it holds, we go back up to highs. If it doesn't hold, we go for that 500 target, which is much lower. All the way here at least. And again, this will happen very quickly. Going back to the daily, you saw this, like we went down how much? 4% in four days. Uh, that's quite a bit and very, very fast. Same here, we went how much? 8% in 3 days. This was 5 days actually. No, for 4 days. So this was 3 days, and we went down quite a bit. So don't think it's way too quick. We can drop like a rock, and the templates are what happened in the 2021 top, meaning either double attempt, and on the third one we go down, or we just go down on the second attempt and do something like this. Okay, that's it for this week. Have a good one. Bye bye.